Coming in at number 5 on our US equity watch list, we're looking at Boeing, and we're looking at a short trade on Boeing. Given that the higher timeframes are showing that we've had this impulse to the downside, we then went into a bit of a corrective pattern, which was a bit of a running triangle, which can equate for the big drop that we saw following that correction. And then we saw a small impulse off the lows. Given the price action off the lows isn't as impulsive as we would like, it doesn't look like what we're looking at is the start of a new move to the upside. It looks more corrective for more downside. And even if that isn't the case, we still have a really nice setup. So as you can see, what we've had is a push up off the lows. We again went into a little bit of a corrective pattern, triangular pattern, and then we pushed higher with this impulse correction, impulse structure that we look for. Going into the lower time frames, you see what's happened since then is that we've seen pretty decent push down from those highs. And then we've gone into correction once again. And what we're expecting and what looks like we're seeing is a bit of a ABC flat pattern correction. So we have our initial corrective impulse, which is quite straight up, straight line move, and then we went into this choppy corrective price action, which we like in our B waves. And what we find at the center of our B wave is a pretty decent looking running flat, which is always a nice indication that we're heading lower, and we pushed lower. So we had this first impulse, we had this corrective price action, and then we moved into the second impulse down to the lows. And since then, we've seen this push higher. So we've had an initial impulse, we've gone into correction, and we suspect what's to follow is another push higher up towards between 200 and 210, maybe as high as 220. And that is going to be the indication and the place we're going to look to get short for at least this move down, at the very least down to around about 140, minimum targets around about 160. So you're looking at a fairly decent drop of around about 30% if we reach our full target. And that's on our conservative side, because there's still a possibility that all of this is corrective and correcting this initial big impulse, and we could push even lower to go and break the lows down at 88. So it's just a really good looking chart. We think the Robin Hood rally has come to an end. We've seen a sell-off. We're seeing a bit of distribution in this area, and we're going to see another sell-off moving forward. So we really like this trade, at least down to 140, potentially as low as 90. Coming in at number 4, we're looking at Lockheed Martin, which is a great play for guys to start getting more defensive in the stocks. As we can see that the Nasdaq is looking really overbought. A lot of the tech stocks looking really overbought. So I think we're going to see some money cycling out of those overbought shares, and I think that Lockheed Martin is going to be a pretty good target of those of that money. So as you can see, we've had a fairly decent A wave. We had a really push higher. Wasn't as choppy as I would like it to be, considering it is supposed to be a B wave. We do see a bit of a correction in the middle, which means this could have just been an extended wave initially, and the second push higher was a little bit muted. And then we saw a big sell-off, and we suspect this is just a really nice looking running flat ABC, which is a really good setup for us to go into the lower time frames and see what we see there. As you can see, we've had a really, really beautiful push off the lows, really nice impulsive move, and we've gone into this corrective motion. Very much similar correction to the higher time frames, where we've had a choppy A wave down. We've had quite an impulsive B wave with this running flat in the center. So although it is quite impulsive, it does have the choppiness that we need. It does have the structure that we need in a B wave. And we have reached our full target to the upside, and we've now fallen down from that level in what looks like a C wave to the downside. So we suspect we're going to move down to break these lows, and that's going to be a good indication for us to get long. There's a potential that we even break these lows, but it's all just accumulation for further upside moving forward. And this all just looks like a really nice expanding flat once it comes to completion. From there, our price targets to the upside, we're looking at a minimum of, depending where we end, a minimum of 435 and potentially up to new highs at around about 480, 487. So we're looking for a really nice push higher to complete the structure, and just a really good looking chart with some very clean price action and the right fundamentals behind it to see a push higher in defensive stocks. Coming in at number 3, we're looking at DuPont, another defensive play where we expect money to be flowing. We've been calling for long DuPont since March, and it's paid off pretty handsomely, and we're just looking at an opportunity to get in and buy more stock for the long run. As you can see, this is a bit of a different picture because it is a much larger degree correction. We see the first corrective wave happened between March 05 and March 09. And then we saw a really nice push higher with some really beautiful corrective price action in the middle. So everything you want to see in a B wave, we had this push higher. We went into a running flat correction, and we then saw another push higher following that. So all of this is just a higher degree corrective pattern of a running flat nature. And what that means is that our price target for this move is new highs sitting at 110, and we're currently sitting at 53. So going into the lower time frames, we're looking for an opportunity to get into the stock, and it looks like we are sitting in around about that area at the moment. Still need some time for it to play out, but very close to being the ideal setup for us. So you've seen a really strong push up from the lows, really good looking price action, and we've now gone into this correction, this corrective price action that we look for. So the price structure is looking really good. We've had this impulse down from the lows. We then had our first impulse of the B wave. We went into some choppy corrective price action, which is always nice to see in your B wave. And then we've started to push higher in a more choppy fashion, which is great. So upside target for the current move is around about 56. We may have seen the highs already, but 56 should be the target. We might push as high as the recent highs, but following that is the move we're more interested in, because it means this pattern is going to be complete. We're hoping it drags out a little bit longer. It's a nice long drawn out correction, and from there we will see another push higher towards our full target of 110. So this is just a great opportunity to get into the stock, accumulate the stock at between 48 and 50, and let this run up towards 100, 110. So great looking stock to hold for the long run as buyers move into more defensive sectors. Sitting at number 2, we have Microsoft, which is just a great opportunity to get short in Microsoft if you can pick the right area. So as you can see, it's that similar corrective structure that we look for in all our trades. We've had this corrective impulse to the downside, and we've gone into a choppy corrective B wave, which has all the right notes. We have that first impulse up, which most of the equities are showing at the moment. We have this running flat correction, and we've had another push higher following that. So this upside targets on this aren't quite there. However, we're still just expecting this thing to turn at any point to come into the next phase of the correction, which is going to be the C wave to the downside. And we're expecting that C wave to move down towards 165, 170, depending where we top out on the stock. So upside target's 220, so maybe potentially still a bit of room to run. We've reached an important level at 215, so we're just looking for signs of a turnaround, and then we're going to move lower to give us a really nice running flat. And then following that move, we should see a really strong push higher. So it's going to be a buy the dip scenario and get into the trade to get continuation to the upside. And finally, on our watch list, Tesla, much hated, much loved by the bulls, much hated by the bears. We have a similar situation that we have in Microsoft. We've had this initial push lower, really strong move down, 60% drop from the highs to the lows, which means we're expecting another pretty big drop from these highs to continue or complete this corrective price action. As you can see, what we have here from the lows is that first impulse that we look for, and this is just a really strong running flat that we've looked for in all the other pairs. We then saw a really strong push higher up towards 1400. So our full target on the upside on this one has been 1450 roundabout. And like I said, we've got an interesting candle forming at the moment, but what we're going to see moving forward, or what we expect to come moving forward, is another push lower of around about 60%. So target areas for this downside are obviously going to be around about 900 to 1,000 is a really strong area of resistance or support and resistance. And if you can get through that, we should push as low as 800. Following that, this isn't the Tesla Q moment, because we're going to see another push higher up towards 1,500, potentially as high as 2,200 as a full upside target. So really good looking trades on both the downside and the upside. If you can get an entry on both of those, we have a really beautiful price structure forming, and we suspect this to be happening imminently. Within the next week or two, we should see a strong pullback in Tesla, and that's going to be a good indication for us that as the broader market pulls back, that it's just a buy the dip scenario, and you want to get in similar to Microsoft in this region to trade this up to probably around about 2,000. So yeah, wild ride ahead. Stay nimble and protect the downside if you can. For those of you looking to learn how to trade and analyze charts and to take your trading far beyond the basic head and shoulder methodology, we've just launched the Seneca Trading Academy, and we're offering a special offer to the first 20 traders, $99 per month, or a special of $900 per year, which is 12 months free. We'll also give you a special one-on-one session valued at $299 if you join by the end of July. So that's going to run out soon, so jump on it. Find more at senecalytics.com/trading academy, trading-academy. And we'll get all the details and a free trial, no sign up, no obligation required. We'll just get access to the first section of the course. So we hope to see you in there, and stay nimble.